Okay, welcome to your week ahead preview with me, Aaron Hill, the Chief Market Analyst here at FP Markets. Now, I hope we all had a restful weekend. Look, the economic calendar is pretty thin this week, which, if you can believe it, is the first full week of July. Now, I thought I'd begin by simply having a chat and looking at where we were last week. Now, it was quite an interesting week last week. We had, of course, those rumors of Trump firing Powell, and we also had the US CPI, the June US CPI inflation data hit the wires. So, tariff threats and announcements from Trump, I feel, have essentially taken a back seat in the markets. As of now, traders appear to have almost become numb to the fact that to Trump's chaotic back and forth trade policy. So, what did catch the market's attention last week was the rumor that that Trump was drafting a letter to fire Fed Chair Powell, and this triggered a brief but albeit direct sell America phase. This is very similar to what we saw in April. Now, the sell America phase, it consisted of the dollar selling off, US Treasury yield selling off, stock selling off. We also had gold propped up by safe haven demand. Now, this was shortly after reversed by, I think it was an hour later, Trump denied the rumor. However, in true Trump fashion, there were a handful of caveats to his renunciation, adding that he does not rule out anything, and but he did note that he thinks it's highly unlikely Powell will be removed from office unless it's due to fraud. Feel free to correct me if I'm wrong, but it is my understanding that Trump does not have the legal grounds to actually remove Powell from his position unless there is cause. This is why I believe Trump's team are essentially looking into things such as possible fraud, which Powell has openly denied. Let's be frank here. This is not about fraud for Trump. This is about Trump not getting what he wants, which is lower rates. Should now imagine if Trump does remove Powell. This would do two things. This would trigger a huge lawsuit from Powell, which is something I do not believe Trump wants at this point. It would also, and more importantly for us as traders, it would also bring in the question of the Fed's independence. The credibility of the Fed's independence is incredible. It's incredibly important because it allows the central bank to make decisions based on economic data rather than political influence, and this fosters trust and predictability in the financial system. If that is put into question, this will trigger a huge market move. And again, we'll see that sell America phase come out. We'll see dollar lower. We'll see yields lower. We'll see stocks trade lower. We'll see gold push to fresh all-time highs. You saw a glimpse of this in April, and you also saw a glimpse of this last week after the rumors circulated that Trump was preparing to fire Powell. We also have to bear in mind that Trump will likely announce a new Fed chair soon, which has been a quite a big talking point across the financial news outlets. And this will, in my opinion, will further muddy the waters for the markets if we establish a new shadow Fed chair, if you will. You will note that Powell's time in office is not up until May of next year. As I'm sure you've heard, there are a number of names in the hat. There are the two Kevins. There is Kevin Hassett and Kevin Warsh, which I believe the former is the more likely selection right now. I believe Fed Governor Christopher Waller is on the radar, who's openly advocating for a rate cut. If you look closely, he is a clear outlier within the FOMC right now, advocating for a July cut. The committee right now is showing caution. He, on the other hand, is outrightly saying he would opt for a July rate cut right now. There's also US Treasury Secretary Scott Bessent's name in the frame. Now, look, even if Trump does get what he wants and he gets a more dovish Fed chair in the seat, the question is, would this result in the kind of dovish activity that the lower rates that Trump wants? We have to remember that the Fed committee is made up of 12 voting committee members. It's not just about the Fed chair. So it's very hard to judge at this point. Just as a little context here, the Fed has 12 members, 12 voting members. 7 of those members are of the Federal Reserve Board of Governors. We also have the president of the Fed Bank of New York, and then the remaining 4 members serve 1-year rotating terms. So the point is, even if we do get a dovish Fed chair in power and the majority of the committee is still of the opinion that we should be on hold, it still opens up a whole another can of worms, in my opinion. So in terms of US CPI inflation, as you can see on the screen here, this was released on Wednesday at 12:30 p.m. GMT. Now, the June report, it was widely anticipated. As you can see here, we had the headline increase to 2.7%, headline year-over-year measure increased to 2.7%. This was better than the economist estimates of 2.6% and up from May's reading of 2.4%. It also came just within just shy, it fell just short of that maximum estimate rate estimate of 2.8%. So it was a strong report at the headline level. At the core level, we did also see core inflation increase by 2.9%, up from 2.8% in May, but fell short of the 3% median estimate. We did also see prices tick higher, particularly in tariff-sensitive items such as furniture, toys. If you look at the report, it's quite clear there. Furniture, toys, appliances, as well as apparel. I think apparel, if my memory serves me correct, was up by 0.4% month over month. This was up from a decline of 0.4% in May. The point is, inflation has increased, and many believe that this could be just the beginning of subsequent rises in future months on the back of tariffs. This will, of course, be intensified should Trump impose the suggested tariffs on the 1st of August. This is the new deadline, and look, if this does go forward and we do see Trump impose those tariffs, much to the displeasure of Trump, this will likely lead to the Fed keeping rates on hold. I do not believe the Fed will. I mean, let's look at the interest rate probabilities right now. What money markets? The Fed. I don't believe the Fed will take any action at this month's meeting on the 30th of July. As you can see here, there is 1 basis point priced in currently. Markets are implying a 95% probability that the Fed will remain on hold. Now, we have 70 basis points priced in for September, so this is a possibility. For October, we are fully priced in for a 25 basis point rate cut of 29 basis points worth of cuts, and then for the year end, 47 basis points rounded. So just shy of the two cuts, which is 2 cuts for the until the year end, which is consistent with the Fed's latest summary of economic projections. The upcoming calendar is, as I've already said, is particularly light, with the focus largely directed to the flash PMIs, the July S&P Global Flash PMIs, manufacturing and services PMIs on Thursday, 24th of July, which is released just ahead of the ECB's rate announcement. Now, I will be closely watching the Eurozone's PMIs for signs of weakness. With that said, I'm not expecting to see much from these reports. Markets have been pretty lackluster in their response to these data of late. And if you remember, a few months back, these were market moving reports and could really provide good trading opportunities, particularly when you had a divergence between, say, the Euro data, the Eurozone data, and the US data. So, for instance, if UK and the EU data comes in bad and the US data comes in good, this provides an excellent shorting opportunity for currency pairs like the euro dollar. So, but I would need to see sizable deviations in the data in order to tempt to trade, if you will. Now, regarding the ECB's announcement, interest rate probabilities, if we look at the ECB where we are, it is widely expected that the ECB will remain on hold at, so look, the key benchmark rate, the deposit facility rate is expected to remain on hold at 2%. The ECB refinancing rate is expected to remain on hold at 2.15%. The investors have assigned a probability of 91% that a no change decision will be seen over a 9% chance of a 25 basis point cut. For the year end, we have just over 27 basis points priced in for the year end. So we have one rate cut priced in, with it being a toss up essentially between October's meeting and December's meeting right now. So, as usual with the ECB's meeting of late, the attention will be on, it won't be on the rate announcement. A no change will unlikely rattle the markets too much this week. So I think the emphasis will be on the accompanying forward guidance with, while any clues with the aim of looking for clues that the central bank is nearing the end of its easing cycle. And this could provide a considerable tailwind for the euro. But look, I'm not holding my breath with this, given the ongoing tariff uncertainty, particularly with the US and the EU right now. I believe little will be delivered at this meeting until that trading relationship between the two countries, between the two sides, are clearer. We also have to remember euro area inflation is at 2%. The growth picture is not too bad, but it's not great. Well, I think for Q1 25 we came in at 0.6%. So it's not doing too bad. And so right now I do not envisage a cut occurring at this meeting or getting too much from forward guidance. Now, versus the euro dollar, versus the dollar, the euro has outperformed this year. I think year to date, we are up more than 12%. Look, however, on a month to date basis, we are down by 1.2%, as you can see on the left chart here, which is on track to essentially trim a portion of that 5-month winning streak we've seen. Look, technically though, the currency pair still has room to move higher. We have room to move higher in the monthly time frame towards that monthly resistance between 2028 and 1930. This is a considerable resistance zone, a technical resistance zone in my opinion, and something that should be noted. Now that should be support there, guys. I do apologize. Go. So while a retest of this support at 1457 could materialize, I do believe the ultimate direction for the time being is to the upside on the monthly time frame. And this is really also reflected on the daily time frame. We're in a clear uptrend, guys. Higher highs, higher lows, a series of higher highs and higher lows, and we're in a retracement phase right now. Now, if you look at the previous retracements, they came in around 1.8% and 1.6%. Now, if you look at the current retracement phase, I think we're down to, it's slightly larger, but we're at around 2.3%. So I do believe that this is a location where buyers could potentially dip buyers could potentially attempt to make a show for the euro dollar. In terms of additional risk events to bear in mind, although I'm not expecting much to be seen from his speech, is the tomorrow's uh, uh, tomorrow we have the well, look, it's here. We have Fed Chair Jerome Powell giving a welcome remarks, providing his opening remarks at a conference. And that's at 12:30 p.m. GMT. Now, I'm not expecting much here, as I've said, and knowing knowing what we know of Fed Chair Powell, he's unlikely to rattle the markets. And do bear in mind that the Fed is in their blackout period right now, which took effect on Saturday and will remain in place until the after the Fed's next meeting. So I think it's the 31st of July that the Fed's blackout period ends. Um, and this really means that the Fed members cannot speak to press and things like that and offer their opinions. So this is something to bear in mind. But look, there is always the outside chance that uh, Fed Chair Powell has just had enough and he quits. I don't see that. I think, as I said, there's a very small chance of that happening. But if it does, you can expect some serious moves to the downside for the dollar, and this could be something traders could take advantage of. But again, it's a very, very slim chance right now. So look, that's it from me today. As always, please subscribe to the channel for more videos like this. Thank you very much for listening and have a great week ahead.